Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Fed Day. What do we got going on in the markets today? Well, the Dow is down about 100. NASDAQ's up about 50. Fed's going to come out in about an hour. My prediction, they're probably not going to raise rates today. They're going to take a pause. We'll see how that plays out, but it probably will be a market mover. Now, will we get a blow off top in the market, or will we start to come down from here? Now, this market, there's been some exuberance in it. I mean, it's a runaway market, right? I mean, we're at what, 4380? I mean, 4380 on the S&P, all-time record high, 4,700. We might push up to that, but I don't think so. I really don't. A lot of people think that this is the new bull market, if you will. They think there's not going to be a recession. They think the banking crisis is over. They think jobs are everywhere. They think inflation's dropping. This is what mainstream media would tell you. Now, that's not my take. Not my take at all. I think we got a lot of problems. I do think the stock market has become unattached from the economy, and I do think that it's run up here. I didn't see this run up coming. Congratulations to all of you that saw this big run up, but I do think that it'll eventually come and pull back down. I do believe that. Now, you see, why do I believe that? Well, I don't think it's a new bull market. Now, we are up 20% from our lows on the S&P, right? From the October low to now, we're up about 20%. And for the year, we're up 13% on the S&P. But if you take out just 7 of the 500 stocks that make up the S&P 500, you take out 7 of those stocks, the market would be down on the year. Now, of course, those stocks are things like Nvidia, like Apple, like Google, Microsoft, Facebook. You take those top stocks out and the market would be done. There's 7 stocks that are pushing the market higher, but a lot of stocks are making 52-week lows. The breadth in the market is what's telling me that this market's going to turn around and come down. Now, we may get a blow off top first. That's possible, but I don't think we're going to make new highs. I really don't. I think that this summer it's going to be a down market. It's just going to pull back down. That's my take. I mean, now you could go back 2 years from where we are right now. Okay, so we're right here 2 years ago. Exact same place. Now, don't get me wrong. The market's been going up and it can continue to go up longer than we would expect. But I am expecting it to turn around and come back down. This is just my take on the stock market. Now, let's go over to the real estate market. Now, if you want to talk about some exuberance, well, wait, let's go to the real estate stocks first, right? Look at the home builders. Lennar, Toll Brothers, they're at record highs. Home builders are just, I mean, it's almost a parabolic move. Look at like what is that? Open Door. Open Door was trading at $1 at the beginning of the year. Already at $3. That's like a triple, right? All right. I mean, that stock is just on a tear, $1 to $3. Okay, that's going up. But these stocks, well, I don't think they're attached to the economy either. I don't even think they're attached to the real estate market. Now, let's talk a little bit about the real estate market here. Okay, so here's the headline. Home prices are set to tumble in the second half of 2023 as mortgage rates rebound and the economy slows. Okay, that's the headline in Yahoo. Now, Yahoo's usually always very bullish on the housing market, but this article says that we're going to tumble. Now, they're only calling for about a 25 to 30% tumble. That's a pretty good tumble, right? I'm calling for 50%. But okay, now here's what the article says. It says that the Mortgage Bankers Association, now they came out and said that Americans are facing the least affordable housing market ever. It's the least affordable. I mean, no one can buy a house right now. Less than 20% of people can afford the average price home. There's something out of skew. It's a big bubble, if you will. But I just love the comments on this article. I mean, it's fascinating to me. All right, let me just start with this first comment. It's homes never decrease in value. They are an appreciating asset. Now, I guarantee you that comment's written by someone probably around the age of 30. They've never seen a down market in houses. Well, they've all used to say that about real estate, right? Real estate only goes up in price. Now, if you look at commercial real estate, oh my goodness, somehow it's already dropped 70%. 70% down. This is the office buildings, right? Comes down about 70%. But the shopping malls, they're handing the shopping malls, they're giving them away. They're down about 70% also. You see, in the shopping malls, about 1 out of every 3 tenants is not paying the full rent. And those are the ones that are still there. Most have already left, right? So the shopping malls have dropped by about 70%. Now we got Westfield Mall out here. Now they're just handing the keys back to the lenders. The one up in San Francisco, $558 million in loans. They just say they walked away from the shopping mall. Here, you guys run it. Look at that. I mean, these people they're probably a pension fund, maybe a bank, and now they own a shopping mall. They don't know what to do with it. What are they going to do with it? They're going to sell it at 70% off and take a big loss. Now, someone was explaining to me how commercial real estate, well, it's kind of like buying a truck, right? I mean, you buy it and you expect to take a big loss, just like if you bought a new truck, because you've got the value out of that truck and the price went down. So this big office complex Wells Fargo bought and lost 60% on, well, that was normal for that because they got the use out of the office complex. I guarantee you that Wells Fargo did not expect to take a 60% haircut on their office building in San Francisco. But that's how a lot of these people think. They think that the housing market is an appreciating asset. Now, I don't even know what that is. All right, I know what a depreciating asset is, but the housing market is a debt asset. Now, if you keep printing more debt, and that's what debt is. It's really the printing of money so that people can borrow more money. Now look in 2008, we came crashing down, but it never finished. It never played out. And that's why I think we're going down 50%. In 2008, we came down, right? But okay, now since that time in 2008, we printed 20 trillion with the T, $20 trillion in money we don't have. We printed it out of thin air. That created the debt that's causing the housing market to explode higher. That's causing the stock market to explode higher. It's not that the economy's doing well. It's that we are printing this money. Okay, so housing market is a debt asset. Now, as soon as you stop printing the money, the debt will dry up. And there's a credit crunch going on right now. It's called the banking system. The banks are starting to fall over one by one by one by one. There's going to be hundreds of them. We're not close to done. It's the tip of the iceberg. People don't see this because it's under the water. You can see the tip of the iceberg, which, was Silicon Valley Bank, First Republic, Signature Bank. These were the tip of the iceberg, but all the banks are doing the same thing. And there's this big credit crunch right now. So housing being a debt asset, believe me, when the credit crunch happens and nobody's there to buy your house, and there's going to be what's called panic selling, forced selling, if you will. People are going to be forced to get out of their houses, and they're going to have panic selling. There's going to be blood in the streets in the housing market. Yes, it doesn't just go up. Home prices also go down. People don't understand that, especially the younger people. I got a lot of young people that watch my channel, so hopefully what I'm telling them, maybe they'll listen, maybe not. Maybe they'll go out there and buy a house. Maybe they'll have some buyer's remorse. I want to talk a little bit about buyer's remorse, but first, let's talk about this. Let me give you a couple more comments. Okay. Now, anyways, here's one that was a comment on that article. My home value is going up. I won't discount the price because of high rates. Now, he thinks that he's in charge of what he sells his home at. He's not in charge of what he sells his home at. You get him going up to 20%, I guarantee you his home is going to go down. And when the panic selling comes in, he may be one that panics out. He may be one that has to sell. And even though he won't discount his price because rates are high, he won't have a choice. All right. Now, here's the other one I love. Okay, I think real estate agents are inflating the housing prices. Real estate agent. I'm a real estate broker. And believe me, if I could inflate the housing prices, I'd do it right now. I'd make them double from here, maybe triple from here. I want them to go up. Of course, real estate agents want prices to go up, but real estate agents have nothing to do with the price. Now, the buyers, what they're willing to pay for the house is what determines the price they sell at. I go on listing appointments and people talk to me like, hey, Mike, my house, I want $2 million for it. Well, that's really cool. Your house is worth $1.5 million. Yeah, Mike, but you can get me $2 million because you're a great realtor, right? No, it doesn't work like that. The real estate agent has absolutely zero to do with the price, okay? Now, that's a big misconception that a lot of people have, but I have nothing to do with the price. I'm just a dumb realtor that's going to find you a dumb buyer that's going to pay you the market price, the price that the market's at, and you're not going to get your $2 million. You're going to get your $1.5 million because that's where the market's at. All right, let me go on to another comment here. Okay, what do we got? Okay, house prices are never going down again. I love that. I love people that think that. House prices never going to fall. They're never going to drop. They only go up. An appreciating asset. All right, one more before I move on. All right, I don't care if rates are 2% or 20%. As long as a buyer gives me my price, I'll sell. Look at your price may be $2 million. Your house may be worth $1 million. It isn't going to matter if they lower rates to 0%. It's not going to make your house worth $2 million. You don't set the price. You're the seller. The price is set by the market. Oh, it's just fascinating to me. I mean, we got a lot of different opinions. I mean, everybody thinks different, right? I mean, I think different. A lot of people don't like my opinions. They tell me that in the comments. And you're free to leave me a comment down there and tell me you don't like it. We can disagree. That's perfectly fine. But let me circle back to that buyer's remorse here. All right, let's talk about Zillow for a second. Now, Zillow, they come out. They have their algorithms, right? And they're coming out and they're saying that we're still up year over year by 0.5%. Oh, okay. Now, most people are saying, Redfin, for example, and a lot of economists, that we're down about 3% on the year across the nationwide. Okay, but, okay, we'll go to Zillow. Zillow's got us up by 0.5%. To me, that's the kind of a rounding error, okay? But they can't say that the market's is down year over year. They're very pro-real estate. Their whole lifeblood depends on real estate. They're in the real estate business, so they got to say that with their algorithms, we're up 0.5% year over year. All right. Well, this may explain why 63% of the people that bought in the last year, they got buyer's remorse. They wish they waited. They wish they didn't buy a house. Why is that, Mike? Well, let's think about this. All right. Let's say you bought $1 million house, and you bought it a year ago. Now you're up 0.5%. So, I mean, that's ridiculous. Let's just call it $1 million in, $1 million now. Now, let's say you wanted to sell that house. Well, what happens? Well, it costs you about 7 or 8% just to get out of that house, right? Okay, so you bought it at $1 million, and now you're taking an $80,000 haircut if you have to get out. Now, if you didn't buy it, you wouldn't have to take that $80,000 haircut to get out, right? Okay, so now if you rented that time. Now, in most areas, actually almost all areas across the country, it's much cheaper to rent a house than to buy one, right? Just the monthly payments I'm talking about. That's all I'm talking about. If you take your mortgage, your property taxes, and your monthly payment, your insurance, I mean, it's about, well, in all areas, it's cheaper to rent, but most areas, it's at least 20% cheaper. Now, if you get to areas like where I live, it's about 50% cheaper. It's about about half as much monthly payment as it would cost you to buy the same home. So if in that year you had stayed a renter instead of purchasing the property, well, you'd have 20% of the money still in your pocket, right? That you wouldn't have had to pay out. And now to get out of the property, it's going to cost you $70,000 or $80,000. So you're much underwater if you have to get out. Now, of course, prices can stay stagnant for a long time. I agree with that. Stock market could stay stagnant for a long time. We're the same place we were 2 years ago. Okay, houses were the same place we were last year at this time, according to Zillow. I think we're actually down from that, but they'll tell you we're the same place. Okay, I'm good with that. But to get out cost you $70,000, $80,000, plus you could have kept between 20 to 50% in your pocket. So if you waited the whole year, I know a lot of you are impatient. You want to get out there. You want to buy a house, but the longer you wait, the better off you're going to be. Yeah, it's great to own a house when they're going up 20% a year. That's a great time to own a property, right? Now, I'm not down on real estate. I love real estate. It's my livelihood. I sell houses for a living. I think real estate is a great asset, but there's certain times that come when it's just not smart to buy. When houses are the most unaffordable they've ever been in the history of the world, that is a bad time to buy. And if you bought in the last year, you got a lot of buyer's remorse. I got news for you. Your buyer's remorse is going to increase as we go forward because house prices are not going up, they're going down. And as they come down, you're going to be underwater. You're going to have negative equity. You're going to have a lot of remorse. Now, hopefully some of this makes sense. I don't know if it does or not. But you see, the rental market is not a bad place to be right now. Because why? Why do I say that? Because the supply of rental units is exploding higher now. Why is it exploding higher? Well, think about it. All right, so that guy that bought the house for $1 million a year ago, he goes to sell that house because he got a job transfer, right? And he got to move closer to work. So he goes to sell that house and they tell him, yeah, we can still sell it for what you bought it for. We can still get you $1 million, right? It just costs you 80 grand to get out of it. Well, I don't want to lose 80 grand, so he doesn't sell. Well, what's his other choice? His other choice is to make it a rental. Now, that's why the rental market's exploding higher. A lot of people won't sell their property. Look at new listings are down about 30% year over year because they don't want to sell into this marketplace because they're losing money when they sell, when they have to take that $70,000, $80,000 haircut. So they don't sell. They're holding on to it in the hope that it'll get high enough so they can make it out without a loss. Now, a lot of people are holding on to that 3% mortgage. But Mike, I got 2.8, Mike. You see, there you go again. That mortgage rate envy, that rate envy's out there. It's a real thing. Equity envy, it's a real thing. Now, a lot of people think they have the equity until they go to sell and they don't get any offers, and all of a sudden they got to bring money to the closing table. They realize they're underwater. Then they don't want to sell. So they're going to make it a rental until the prices go back to where Billy Bob got out at. Now, this is just my take. You can stay in your rental property, which I think is a great idea right now. 20 to 50% below the monthly payment of purchasing a home, and the home prices are going down. Look, renting's not a bad thing right now. I love real estate. There's going to be opportunity. There's going to be some great opportunities coming. But you got to sit tight. You got to be patient. I know a lot of people have to buy, and they go out there and they buy, right? But if you don't have to buy, get some popcorn, sit back, watch the show. You're going to see panic selling. It's a freak show. It's a horror show. This is just my take. I got carried away today, didn't I? Anyways, I'm Tall Mike. If you like this stuff, give me the thumbs up. Why not? It's Wednesday. It's Fed Day. Fed's coming out in about an hour. Very exciting. I say they pause. We'll see if I'm right. I know a lot of you think they're going to raise by a quarter, but I think it's a pause this time. Anyways, have a great day, everybody. Bye-bye now.